This is the current stock market update for NIO Incorporated, stock ticker NIO. Before we begin with today's stock market analysis, if you find these educational materials to be helpful, please remember to click the like and subscribe buttons. Leave your thoughts below in the comments section so that other traders can find this information more easily on the platform. We will start by looking at the weekly time frame. Each candle represents a full week's trading period. And what we can see when we look at this broader viewpoint is really sort of the overall trajectory and price history that has taken place since the initial IPO period. If we go back to roughly the middle of 2020, so it's this kind of pandemic type period here, we can see that social media really took hold of the stock. NIO became very popular on YouTube with people like Stock Mo and Meet Kevin. And of course, these were two people that were telling everyone to buy the stock at these upper levels. So we're talking about roughly $65 per share here. And for the most part, Stockmo and Meet Kevin, what was the argument? The argument was that the stock was going to double from this area because NIO was quote unquote the new Tesla or the Chinese Tesla. Unfortunately, what wound up happening here was that people that bought into the stock at those upper levels got stopped out very quickly and people became very disillusioned. The stock lost about 95% of its value over the next 2 years. So that would be this major price decline. And then we did start to kind of range between, at the highs of roughly $16 per share, kind of going back to this region right here. We're talking about roughly the second half of 2023 to the top side. And then to the downside, we were usually looking at lows of around $3.50. If we kind of blow this price chart up a bit here, what we can see is that the stock did spend much more time at the lower end of that trading range than it did at the upper end of the trading range. So there's clearly a lot more activity here at these lows rather than the highs. And then more recently, and we are going to move down to a more near-term price chart in a moment, but more recently, the range has actually started to constrict and tighten. So to the top side, we're really sort of looking at a price high of something closer to around $8 per share. Rather than the 15 or 16 that was being seen previously. So the reason that this upper price level here is significant is because, as you can see, there's this pink or red line here, which is the 200-week exponential moving average. And it's really sort of coinciding with this area right now. So in many cases, that is a price zone that will work as an area of resistance. It can be very difficult for any asset price to move above that 200-week exponential moving average. And over the last year, what we've seen is a series of lower highs that does start to look a bit concerning for anybody that is long the stock. Next, we're going to take a bit of a shorter term view here. This is the 4-hour time frame. Each candle represents a 4-hour trading period. And this does give us a more closer look at the recent price action and that lower high that has developed since the stock was trading around $8 or so going back to last October. For anybody that is currently holding a position in NIO, this is really the price movement that's most important right now. So to the downside, we've got, as I said, a price low of around $3.40 or so, something around there, and then about $8 to the top side. So if we look at a Fibonacci retracement study, what we can see is that in addition to the lower high, the stock recently tested its 78.6% Fibonacci retracement zone. That would be this light blue box down here. In this case, we have a fairly good example of a Fibonacci price zone working as an excellent support region. We did see the stock bounce into about $7. But then since then, we have started to come close to retesting those prior lows, which are seen around $4.40. So right now, in my opinion, this is really sort of the main line in the sand. I mean, the stock is kind of hovering around $5 per share, but I would argue that you're not really seeing a lot of buying activity in this region. You would have expected possibly a greater bounce. People maybe buyers start to emerge here. Anybody that's bullish on the stock, you see a decline like this, you start to try to maybe buy at the lows or something. And but the problem is you're not really seeing that emerge here. You're not really seeing any forceful price movements. You're really just sort of seeing a downtrend channel that is emerging. So this is worrisome because it's the $5 level is not the major level of support. You might think that it would be because it's a round number, a psychological figure, but this area did not generate buying activity. In my view, the real level here is $4.40. And you either need to see, you've got two different scenarios here. You can see the stock bounce from here. That'd be the bullish scenario. Or you see the stock break below here. In that case, you've got a real problem because the next level of support to the downside is not seen until we go back to those prior lows about $1 lower, right around $3.40. So $1 different might not seem like a very big difference, but when you're talking about a $4 stock or something, you're talking about a 25-30% loss from current levels. And that's a fairly significant price move, especially when you're dealing with a stock that does trend heavily, like NIO does, on social media, and gets external help from social media. In other words, if that positive benefit of social media trending activity is not enough to send the stock higher, you've got a real problem, because anybody that was buying the stock at these levels, retail traders, social media traders, these people are going to wind up getting stopped out and having margin calls at some point. In my view, this is probably likely to happen around $4.40. And I just think the broader viewpoint here doesn't really lend itself to the positive outlook that's almost always seen on YouTube. We see these prior highs, which almost always top out around $7.70 or around $8 per share. As we can see here, there was a prior test here, a prior test here, a failed test here. The stock wasn't even able to reclaim those areas to the top side. And then to the downside, you're looking at something closer to like $3.40. So if anything, I mean, I don't know why anybody would be interested in a stock like this, but if you were going to trade it, this is really the trading range that you would want to be looking at. I mean, you would be looking at something like buying toward 350, somewhere around there, and then possibly selling toward, 750 or something like that. The only problem with social media is that these things tend to generate hype, work on hype very much. And you start, once the stock starts to rally, it went to $8. Now it's going to $20, then it's going to $50, then it's going to $100. And nobody ever sells the right levels. Well, in this case, if you are holding the stock and you are somehow fortunate enough to buy around 350 or so, you should probably consider taking gains around 750 rather than listening to people like Mr. P, who are telling you that the stock is going to $100 per share.